Yeah. I think the mic.
Hello, everyone. Well, welcome this afternoon. I hope you can all hear us. See something. You can see the GAIL slides. Today is the GAIL APAC webinar on blended finance. My name is Michael Ireland, and I'm Vice President of GAIL. We're going to talk today about how blended finance is working in the APAC region, what's already happening, and what kinds of opportunities are emerging. In particular, we're going to be adding a legal perspective. A bit over a year ago, GAIL, Global Alliance of Law, decided to explore the legal aspects of blended finance to map out how well the law supports or doesn't support finance across different jurisdictions across the world. For those of you who don't know GAIL, we're a global community of lawyers who think that law and lawyers have got a role to play in achieving positive social and environmental outcomes. Our aim is to connect lawyers who want to do that, to share learnings on how we can have a positive impact and to help develop ways to do so. That's the perspective that we brought to blended finance. We were conscious that a tremendous amount of work has been done and looking on blended finance from a policy and financial perspective, but not very much from a legal perspective. So we thought there was an area where law and lawyers could make a contribution. In April, we released our report called Unlocking Legal Pathways for Blended Finance, Case Studies and Global Insights. And we'll talk about this report, particularly from an APAC perspective, later in the session. Our plan is to discuss the topic in three parts. First, the state of play in blended finance activity, both globally and secondly, the legal framework, also going from a broad multi-jurisdictional perspective and a specific APAC jurisdiction. And then third, the opportunities and perhaps barriers too, what we're seeing happening that is relevant to APAC, and some case studies showing how the law can provide new infrastructure, a platform for blended finance in the region. But first of all, let me make some introductions and pass on some thanks. We have a great panel, which mixes lawyers and non-lawyers for the discussion. Ritesh Thakkar and Tristan Ace will set out the current state of play. Ritesh Thakkar is head of Asia Pacific at Convergence. As many of you will know, Convergence is the global network for blended finance. It generates blended finance data, intelligence, and deal flow to increase private sector investment in developing countries. Tristan Ace is Chief Engagement Officer and Policy Head and Northeast Asia Coordinator of ABPM, which is the largest network of social investors in Asia. On the legal side, we have Vivian Chu, who's a partner and head of asset management in ESG in Hong Kong at the global law firm Dentons, and Satara Hotta as well, who's an associate in Nishimura and Asahi, also a global law firm based in Japan. And myself, Michael Ireland, I'm a principal and founding director of the Centre for Social Finance Law, which is a legal advice and research centre in Australia. I'd also like to pass on some thanks. First to UBS, in particular to Cindy Leung, for hosting this event at their offices in Hong Kong. There are always extra complications that we've discovered in having a hybrid event, and we're very grateful to UBS and Cindy's helping putting that together at the Hong Kong end. I'd also like to thank Sarah Dobson James and Louise William, GAIL's Executive Director and Head of Membership and Governance in London, who both put everything together at the GAIL end, which is including getting up in the middle of the night in London. So thank you. Let's start then with the state of play. And Ritesh, could I ask you to lead off on this and perhaps also say a little bit about Convergence and your own background and perspective on this topic? Ritesh.
All right. Thank you so much, Michael, for the introduction, and thank you for inviting us to be a part of this session as well. I'm sorry if my name reads incorrectly. My name is not Michael, I'm Ritesh, so I believe you should be able to see that. What I'm going to do is I'm just going to take us through few slides on more specifically what is blended finance, just to make sure that we all have a common understanding of it. And then subsequently in my discussion, we'll also talk about some trends and what do we see more specifically in APAC, and also some of the challenges, but also opportunities from a legal and a regulatory standpoint as well. So maybe just to give you a very quick introduction on blended finance, but before we go there, a very quick introduction about convergence. So if you can go to the next slide, we are, as Michael mentioned, we are basically a global network for blended finance. We are a global not-for-profit with over 180 plus member institutions who are a part of this network, both equally representing the concessionary world, which is the overseas development assistance funds, the MDBDFIs, and the philanthropic sector. And then, of course, on the commercial side, large banks and financial institutions, asset managers, insurance companies, social enterprises, and even not-for-profits as well. So it's a very strong network of practitioners who do actually a lot of blended finance transactions in the market. In our capacity, what we do essentially is four things as a part of what we call ourselves as an ecosystem builder or a field builder. The first part is really guiding the field on the topic of blended finance. We pretty much have the largest repository of data that you can find on blended finance at one place. And that, along with the network that we have, we also develop a lot of thought leadership. One of our annual publication, which is always sought after, is the State of Blended Finance Report, which comes out every year. And from this year, we are actually launching two editions. One is the spring edition, which we launched a couple of months back. But then we are also coming up with a climate edition, which is going to be launched sometime in October. And we really set the tone for global discussions on blended finance through various forums like COP and World Bank Spring meetings. The second part which we focus on is educating. So clearly, capacity building is one of our key focus areas, and we do recognize that more specifically in APAC as well, the knowledge or the understanding of finance is quite low, and that's a role that we play as a part of our ecosystem building effort. The third one is really, at the end of the day, we are a network, so we would want to connect more and more of these stakeholders together, which comes from very different background and also have very different perspectives. And the last is really on mobilizing, where we also provide market acceleration support to really bring live solutions out in the market in the field of finance. And we do that through a design grant mechanism where we give grants to design blended finance structure. And we also have a deal matchmaking platform. So that's in a nutshell us. Going to the next slide, which is essentially what is blended finance, just to make sure that we are all on the common page here. Essentially, the way we define blended finance, and just to keep this conversation completely jargon free, in simple terms, how do we use the development funding, which is normally seeking impact or normally seeking objectives which advance sustainable development goals. And such form of funding normally comes from public sources, which is either overseas development assistance funds or philanthropic sources. Um, and the whole point is that how can we use these funds very strategically so that we can alter the risk return profile of projects, investments, to make them more bankable and investable, and thus mobilizing private sector investments at market rate. So in a classic blended finance structure, someone is taking a concessional layer, so really taking disproportionate risk or return, which is then mobilizing mainstream private sector capital to come at market rate. And that's essentially what is how we define blended finance. And the whole point is that why do we need blended finance is because we all are aware that the financing gap is huge. It's in trillions. And the development funding circle that you see here has an annual funding of around 250 to 260 billion dollars. That's it. So essentially, if we don't mobilize private sector capital, there is no way in which we can really bridge this financing gap. And what we've seen in blended finance transactions, based on all the data that we gather, is that we've seen a leverage ratio of around 1:4. So that means $1 of development funding or concessional funding is able to mobilize almost $4 of commercial capital at market rate in areas where there are market failures, in areas where the current financing is not flowing. Next slide. So essentially, what we are looking for in a blended finance transaction is three major things. One is the leverage, and I just spoke about the leverage that $1 is moving $4 of commercial capital. What we are looking for is also impact. Of course, impact is at the heart of the transaction, or the fund, or the structure, whatever we are putting the blended finance structure into, which really advances sustainable development goals. And then, of course, you have the returns. So the commercial investors get commercial returns, and the concessional investors or allocators get the development impact, what they are essentially trying to seek for. And if you see, blended finance transactions essentially lie at the intersection of these three characteristics, and that's how we judge whether it's a blended finance transaction or no. Next slide. So essentially what we are trying to say is that, what you see here is basically the dark blue line is the market efficient risk return line. So all the projects or investments which are on the line or above the line are pretty much bankable and investable. And all the projects which are below the line are not bankable and investable. And normally most of the projects or funds or structures in emerging markets, which are really advancing sustainable development goals, tend to be below the line. And that's where what blended finance essentially does is that it is either helping to de-risk transaction. So you're moving from point A to point B, or you're trying to enhance the return of the transaction so that a commercial investor can get into the transaction and it can fulfill its fiduciary responsibility or shareholder expectation by entering into that transaction. So that's essentially what it is. Either you're using blended finance to de-risk, or you are using blended finance to enhance return. And that's essentially the core objective that we are trying to look for in, or we're trying to use blended finance for in that sense. Next slide. So essentially, this is a busy slide, but all what we are trying to say is that what we normally see in the world of SDG financing, you have aid and philanthropy which operate separately. You have impact investors who operate separately, and then you have commercial investors who normally don't find any, most of the times don't find it commercially viable to kind of get into a transaction or a deal. What blended finance does is that it brings all these three actors together in a single transaction. And as you see, it could be structured as a fund, it could be structured as a facility, it could be structured as a bond or a note. So essentially, blended finance is not a investment approach. It's just a structuring approach which can take any form or shape, but it brings all these diverse forms of capital together, which then leads to further advancement of sustainable development goals. And everyone takes their share of what is acceptable in terms of risk and return over a period of time. The next slide. These are some of the common archetypes that we see in the world of blended finance, specifically. So the first part is concessional debt or equity. And this is where you have, more of public investors like ODA funders or governments or through public finances, all philanthropic organizations really taking the non-market or taking disproportionate risk or lesser return to really bring or mobilize private sector investment to come and join hands, which then helps to scale a transaction. So essentially, what you see in the capital structure here is that the flexible debt or the junior equity is where the public or philanthropic investors would come, and that would then mobilize mainstream private sector capital to come in at senior positions like senior debt, as an example. Then you have guarantees and insurance. Essentially, as we know, guarantees and insurance play a very important important role as a risk reduction tool. They also play a very important role in narrowing the gap between the real and the perceived risk. And of course, once you are able to mitigate that risk, the commercial investors are more comfortable to join in a structure which they ideally wouldn't have. And this is where we are trying to address market failures through guarantees as well. And this is quite a common archetype which is used in Asia as well. You have results-based financing. I'm not going to spend more time of it, but we know it's more outcome-based. And once you've delivered the outputs, you get financing for that. So that's quite straightforward. We have design preparation and stage grants. So this is where you're giving grants so that it can improve the bankability and investability of such projects. So one of the examples that I gave at the introduction was that we, in our capacity, also give grants to design blended finance structures. And that's essentially an example where we are trying to bring demonstration effect to the market. We are trying to make that structure more investable, sure that the vehicle is right structured to advance sustainable development goals for a specific objective for what it is set for. And then the last pillar is essentially technical assessments. And I think this is something which most of us would be familiar with. It really aims to maximize quality of project implementation, making sure that it's long-term commercially viable, but also brings the whole sustainability angle. And the next slide is essentially my last slide for the first part of my intervention. So essentially the way you should be looking at blended finance is, or we should be looking at blended finance is basically a transition tool, right? It's a transition tool which can help you develop more bankable and investable projects. It helps you to lower the cost of capital of projects. It helps you to mitigate or enhance returns for a specific project. And it certainly enhances public, private, and philanthropic partnerships. I think the word here, transition, is really very important because you should be using blended finance on the principle of minimum concessionality. That means your concessionality has to be reducing so that you are trying to make a specific long-term case for commercial sustainability of a specific area or a sector. And then essentially what you're also trying to do is mitigate the perceived risks. So that in a nutshell is what is blended finance. And I'm going to give it back to Michael for further discussion. I'm happy to share more on what trends that we see in the region and what could happen to bring more momentum in this area. Thanks.
Thank you, Anna. That's great. That's really setting well. Can I move on now to Tristan and ask you to talk about your perspective on blended finance, maybe again?
Sorry, Michael, is that a question? I'm sorry.
I was moving on to Tristan. If I could, Tristan, can you?
Oh, okay. Sorry. Apologies. Yeah. Okay.
So I didn't quite catch that, Michael, but I think if it was an introduction to speak, then I'm happy to start now.
Yes, please do so. Yes, go ahead, please do.
I'm sorry, we're in the room, those based in Hong Kong, so this is Vivian here. Just want to confirm if Tristan, you can hear us? And
I can just about hear you. Yeah.
Okay.
Tristan, can you hear me now?
Yeah. Ah, yes, that's better. Yeah.
Okay, that's good. So yes, no, please do. Yeah, I was saying thanks so much to Ritesh, and perhaps if you could follow on from that with your own perspective from AVPN.
Absolutely. Well, yeah, first of all, thanks, Michael, and to the GAIL team for the opportunity to be with you this afternoon. Unfortunately, I'm not able to be with you in person, or I am ordinarily based in Hong Kong. I happen to be in Singapore with our team here this week. So what I thought I'd do just for about 5 to 10 minutes is just give a brief overview of what AVPN is for those of you who may not be familiar with us, and then talk a little bit about the work that we're doing to support and grow blended finance across the Asia Pacific region. And then as Ritesh said, perhaps later on in the conversation this afternoon, I could talk a little bit more about some of the trends, challenges, opportunities that we're observing in our work. So ADPN is Asia's largest network of social investors. We have about 600 members who sit across the continuum of capital, of impact-seeking capital, ranging from philanthropies right up to impact-focused funds, development finance institutions, family offices, corporate foundations, so a whole range of organizations. We operate in about 33 markets across the region, and our role really is to support these organizations in their attempts to deploy capital to achieve a variety of impact goals. Moving to the next slide, how do we do this? Well, we do this through a range of different activity types. First of all, as I said, we have our member network. We also provide knowledge and research and insights, and part of that work, we have our ADPN Academy, which provides learning opportunities across the broad field of sustainable finance and philanthropy as well. We then have our capital mobilization teams, which actually deploy capital, and our impact focus areas are around climate, gender, health, and youth. Then finally, and here we've done a lot of work around blended finance. We work on policy engagement and providing a platform for our members' voices to be heard in some of the regional and global dialogues around sustainable finance, and which includes our work on blended finance as well. So moving on a little bit further to focus a little bit more in the next slide on how we mobilize capital. So we do this through our philanthropic pooled funds, where we work with members to pool capital. We have since over the last 4 to 5 years launched 11 funds with 27 funders. We've raised over $37 million, and we've provided grant capital to about 55 organizations across the region. So far, the work we have done has been purely philanthropic, but we are also now starting to think a bit more deeply around how we can build some of these more innovative financial instruments, particularly around blended finance. And I'll talk a little bit more about that in a moment. But moving to the next slide, just to talk a little bit about why blended finance is important for ADPN. We know that it holds huge promise, as Ritesh highlighted earlier. And there is a huge untapped opportunity across this region. But there is a huge also capacity gap as well. That's really what we're focused on, is how to sort of help organizations to deploy their capital more effectively. So moving to the next slide, let's talk a little bit about how we're starting to do that as well. So we leverage our wider network. We have a huge pool of capital with a huge diversity of types of capital holders. We have our experience of managing funds, which I highlighted already. We're sort of starting to see huge interest from across our network in thinking more about how they can more effectively leverage capital to greater impact, and a much greater focus on how they can measure the results of their work as well. So we leverage all of this expertise and knowledge and assets to try to grow the blended finance field. So what have we done so far? Let's talk a little bit about the work that we have done. Moving to the next slide. One of the things that I think we've done a lot of work on is around our policy engagement work. We were the impact partner for the Indonesian government presidency of G20 back in 2022, and that led to the launch of the Global Blended Finance Alliance earlier this year. We were in Bali for the inauguration of that new institution, which is an institution that has been coordinated by the Indonesian government, and it was as a result of the work that they did in 2022 to develop a global South-led institution to promote and grow blended finance globally, but really led by the issues that were faced in the global South, and particularly in developing Asia as well. We've done a lot of work also on the concept of catalytic capital, so how we can use philanthropy to catalyze investment, and as Ritesh said earlier on. So looking at the opportunities there, we published a report last year with the Catalytic Capital Consortium, which looked at some of the opportunities and challenges that exist. I could talk a little bit more about that later. And then finally, we've done a lot of work through our Amy Fern Academy, through the Social Finance Academy, which has been supported by UBS, actually, in fact. And that work is, again, trying to support social finance professionals to develop a greater understanding of how to identify the right tool to achieve various types of impact. So moving on, let's talk a little bit about, if I can move on to the next slide. I talked a little bit about the work around calculated capital, and this is something, given some of our roots in philanthropy, we think this holds huge potential to unlock, to really try to catalyze commercial capital, concessional capital, to invest in blended finance structures. So we're doing a lot of work with our members to familiarize them, to build capability amongst the newer philanthropies in this region and help them think about whether this could be potential approach that they could take. And we're looking at a couple of instruments that we've started to develop, and I'll talk a little bit about those just before I conclude this afternoon. So moving to the next slide, we've started to think about a new pooled facility where we are working with our members to help them with a range of approaches, including looking at first loss, looking at guarantees, technical assistance facilities, and also design grants as well, which is something which Ritesh highlighted finally. And then I'll conclude just by talking about one exciting initiative that we are working on at the moment, which is our Climate Agri Fund. And I'll just move to the final slide to talk a little bit about that. This is a new instrument that we are developing with the, if I can move to the next slide. Yeah, here we go. So looking at climate smart agriculture in Indonesia and India, this is a loan facility that we're looking to establish, where we aim to raise philanthropic capital to support the de-risking of the lending facility from MDB to financial institutions in India and Indonesia to support SMEs in their climate adaptation efforts. So this is for us something very, very new, something that we'd love to talk to potential philanthropists about in this region, about participating in. But we think that this offers a great opportunity to leverage philanthropy to support and to really support adaptation efforts across the Asia-Pacific region. I might stop there and then talk more about some of the trends, some of the opportunities and challenges that we're also seeing a little bit later this afternoon.
Just to ask the HK UBS team to unmute the room's mic so that we can hear you, Michael.
No, we need to unmute the
That's
mic.
it.
Yeah, I think it works now, right?
Sorry, is that now working, Sarah?
Yeah.
It is, yes.
Oh, good. Excellent. Sorry. Thanks. Okay. Yeah, no, that's fantastic. Thanks very much, Tristan. That's given us a great base. Ritesh and Tristan's overview of how blended finance works. If we could, what we'll do now is we'll move on to the legal framework, just set out the basis for that, and then that will give us the basis for starting on the discussion and the Q&A afterwards. So on the legal side, what we'll do, we'll start. I'll give a brief thumbnail sketch of the GAIL report on blended finance, the legal aspects of blended finance, and then I'll ask Vivian to talk about some specific jurisdictions in the APAC region, then also ask Satoru Hotta to talk about Japan. Let me start with our report. I guess the first question is why were we interested in blended finance? Why did we think it was important? At GAIL, our work's focused on looking at corporate models and capital flows from an impact perspective. For example, what kind of models and flows are involved in addressing climate change and biodiversity challenges? What kind of models and flows are relevant to achieving a just transition? And that's how we approach the topic of blended finance. We see it both as a very useful tool to achieve positive outcomes, and also as an example itself of capital flows and associated corporate models that lawyers need to know about. We think it's an important tool because there's going to be a vast amount of finance, already is a vast amount of finance, directed towards climate, energy, and social transition over the next few decades. And we don't think it'll be a just transition if it is led and funded purely by standard commercial finance. The focus will be wrong and the delivery will be skewed. So it's first reason. The second reason, blended finance is a tool to get that focus and delivery right, but it doesn't work without the right legal platform. And that's GAIL's job, to help develop the right legal platforms for it. When we were preparing the report, we drew very heavily on convergence, better society capital access, FinDev Canada, the formats they have for understanding blended finance, and we're working with those, and we want to thank them for their great help. And then what we did was we pulled together about 40 GAIL lawyers across 13 different jurisdictions to understand what is the current legal framework. What's the current legal landscape? So we're starting, as you can see at the bottom of that diagram, we're just starting to look, what is the legal landscape? What are the legal frameworks? What are the legal instruments that are actually used, just as a sort of fact-finding exercise? We worked on that by developing jurisdiction overviews through case studies of particular examples, and through a couple of state of play reports, one on legal critiques and one on a particular issue, the AIFMD2 implications. If we go to the second slide, Vivian, the next one there. Okay, so very briefly, what do we look at? We've got jurisdiction overviews from those jurisdictions there: ASEAN, Hong Kong, Singapore, Australia, France, Japan, Mexico, UK, USA. Not seeking to be comprehensive, but seeking to be illustrative of the sorts of different legal systems that are relevant. The state of play reports, as I was saying, a legal critique and AIFMD2. And then the case studies had a range of topics and a range of instruments. You'll see there climate, housing, marine conservation, sustainable forestry, etc. And those particular instruments, the funds, swaps, loans, guarantees, which you'll see map over to the archetypes that Ritesh is talking about. Those case studies went through, and they're all there in the report. There are about 28 case studies, 7 jurisdiction overviews. As you'll see there in the diagram, as we're looking at it from a legal perspective, we found an interesting distinction between blended finance at the development finance level and blended finance at the impact finance level. The development finance level, which is more weighted towards public and private blending, the impact, which is more weighted to philanthropic and private funding, they raise similar legal issues, and to the where you're in fact measuring all three, they're raising a lot of the very same issues, but they're doing it from really quite slightly different dynamics. So we started to draw a distinction between that from a legal perspective, partly also because the lawyers who work on development finance, the lawyers who work on impact finance tend to be different lawyers. And so there's not the crossover of learning that there should be on that. And our view was that there are things that the blended development side can learn from the impact finance side, and vice versa. The legal issues play out in slightly different ways. So the development finance, the issues play out in terms of the financial terms. the way risks are allocated and the contractual arrangements. That's sort of where the heavy lifting goes in. Whereas in the philanthropic private side, the legal issues play out more in terms of fiduciary duties, legal vehicles and governance, tax concessions, those sorts of things. So, sorry, that was our, that's just a thumbnail sketch of the report. I would say that on the next slide, you'll see we've included the link to the report, you can find it. The key takeaway we have from a legal perspective is that the legal frameworks are there, they can be used, they are important to blended finance, but they're patchy and they require a lot of innovation to make them work. And there's much to be gained by working collaboratively on the common legal issues. The report we've characterised as a stage 1 report because it was really mapping things out. We think there is another round of work to do more analytically to perhaps help develop some structuring legal principles to spread awareness and knowledge of what the legal opportunities and issues are. And also perhaps some recommendations for best practice. We think there's further work to be done on all of that. That's, I think, enough on the report. Vivian, I might turn over to you to chat about some specific jurisdictions in this region.
Thank you, Michael. I'm very glad to be here. I'm sitting in a room with Michael, and I think we have about 20 people in the room. So thank you again, UBS, for hosting us here. And so I think in terms of the jurisdiction report that we'll cover today, there's also the Australia report that Michael authored, but I think I would just cover quickly the Asia report, and particularly with an emphasis on ASEAN, Hong Kong, and Singapore. And the reason for that is, and I think just to start to make clear, I think we'll just draw some highlights of the report as Michael has done for the overall report approach. So I'll do the same for the Asia chapter, but not to go into detail, and hopefully invite you to read the report in more detail. So it's just a high level. So to begin with, I think it is an Asia chapter, but highlighting that for Asia, we have different legal system, different political system, and really different context, economic context. And so we emphasize in this more sort of cross-border aspects. And so we use ASEAN and we use Hong Kong and Singapore in that context. Whereas I think there are blended finance structures or, deals or transactions happening in India, in China, for example, and some other markets, but those are probably quite domestic in nature. So we covered that a bit in the report. So I guess I should take a step back to say that, I am a lawyer focused on financial services and asset management and capital markets. So my background in these areas, is sort of touch on structuring, so covering legal, regulatory, and tax issues. So I try and highlight some of my experiences and knowledge as I wrote the report. And I guess a lot of what we're looking at and is actually within GAIL is how we can drive present legal forms and legal instruments towards impact, and having convergence here in structuring in the commercial side and having a VPN on the social side, brings together the point that this is very much a need to engage multi-stakeholder and looking at blended finance structures does need to carry the thread of what is the impact we're looking at, what is it that we're looking to serve. So within that framework, as Michael described, we have sort of broadly development finance and impact finance that we've considered. So the Asia chapter takes the same approach. And so I guess development finance, there is a need to highlight that in Asia, we have the Global South jurisdictions. And at the same time, ASEAN covers both some more developed economies, as well as economies that still has substantial development needs. And so some of the efforts that we see on the sustainable finance side actually kind of highlight some potential opportunities or potential for some of the tools developed or instruments developed in the market that can be used in the context of blended finance, and that has a development finance angle. So we sort of cover then examples, the ASEAN Capital Markets Forum's effort, which is heavily leaning towards mainstream sustainable finance, but there is an ASEAN SDG bond toolkit, which is developed by ACMF, together with the support from ADB, the Sustainable Finance Institute Asia, and Climate Bonds Initiative. And separately, there's also the ASEAN Catalytic Green Finance Facility, supported by a number of co-financing partners, mostly MDIs and DFIs, multilateral development organizations, and also having knowledge partners, including Global Green Growth Institute, Infrastructure Asia, and OECD. So the report sort of highlights some of this in the context which talks about the market and policy, legal, and regulatory framework. And on the impact finance side, that's where we identify sort of the emergence of other impact funders, maybe private actors, private philanthropic organizations, but also sovereign wealth funds that are having a focus on impact. So I've named some examples from Indonesia, Malaysia, the Khazanah National Setting Up Yayasan, Singapore Temasek Trust, and also capacity building, such as the Center for Impact Investing and Practice. So we've covered those in more detail in the report. And then this idea of legal forms, social enterprise, and how this is being perceived in Asia and different parts of Asia. Some examples in Malaysia, in terms of how Malaysia had and still has sort of quite specific definition or even regulatory body that look at approving social enterprise which are specifically for profit. But elsewhere in ASEAN or Asia, there tends to be a confusion or a mix of referring to social enterprise as for-profit or non-profit. So I guess if we share common impact objectives, that might not matter too much, but when it comes to actually structuring a deal or getting the parties involved in the transaction, some of these gaps or differences in legal forms might come into issues or become barriers. And then, that might depend whether it's impact investing or grant funding models. So those are some of the dimensions covered in the report. And then I have this slide to also highlight, in a way, we always kind of strip it down into, because I have kind of been looking at the spectrum of sustainable finance and social finance across. So sometimes it's just simpler to look at, jurisdictions or entities or structures that are receiving the funds, or kind of the ones that are giving grants or investing. And so for Hong Kong and Singapore, where do we sit? I guess it can be either, but in the report, we highlight in particular Hong Kong and Singapore as sustainable finance and impact finance hub. So more of a perhaps intermediary jurisdiction. And in this context, the report on Asia also covers some examples of the legal structures that impact funders can use, maybe developing wholesale funds in Hong Kong and Singapore, using the fund vehicles that are available. I'm a fund lawyer by background. And so that is quite a natural thing that we can consider. And then also using charitable organizations and what are the relevant tax exemptions and incentives that we have now in the market is covered. And also looking at the charitable law and charitable law framework, the framework for registered charities in Hong Kong in particular, where Hong Kong has a well-established charitable, I guess, ecosystem, where the charity law actually allows for regional giving. So that's a unique role that Hong Kong can play. And also sort of some detail around Hong Kong charity law that might allow financial investment or program-related investment by Hong Kong charities, which is not commonly, or maybe only in some segment of the charitable market we see that. So there can be more capacity building. And then I think another dimension is how Hong Kong and Singapore are both promoting family offices. And in this context, there are elements of incentives catered towards philanthropic giving, and also blended finance structures, specifically in the case of Singapore family offices, incentives that included blended finance structures in meeting capital deployment requirements for the family offices to be able to meet the incentives, requirements for incentives. So those are the high level. Do read the report for further interesting details, and happy to take any questions you have. And I'll pass now to Sutaro.
Thank you, Vivian. By way of introduction, I'm Sotaro. I'm an associate lawyer of Nishimura & Asahi based in Tokyo. Currently, personally, I'm based in the UK, so that's why I joined this meeting by Zoom. I want to talk about the Japan jurisdiction overview. As a premise, I want to talk about the main player of the blended finance landscape. As Michael and Vivian mentioned, we divided into two areas like development finance and impact finance. Speaking of the development finance, JICA, Japan International Cooperation Agency, is by far the biggest player in Japanese market. They are the government-backed organization, and they are focusing on supporting or improving the social and economic status of developing countries like Asian countries or South American countries or African countries. And they are focusing on some infrastructural sector like energy finance or agriculture and water or something like that. And speaking of impact finance, to be honest, there's no specific player in Japan so far. But there are some cases dealing with blended finance scheme, and they are focusing on the transition finance related to the climate change and also the healthcare issues.
Sorry.
No worry. Thank you. And to be honest, the number of blended finance transaction is not so huge. There's some innovative finance like the social impact bond issued by the local government, adopting the blended finance concept. Moving on to the next page. Thank you. I want to talk about the legal landscape of Japanese blended finance. As an assumption, I'd like to highlight that Japan is the civil law country, so national legislation is applied uniformly throughout Japan. Financial transaction is based on mainly civil code or commercial code or Companies Act. Of course, we have to consider about some regulation like because blended finance is a financial transaction, we have to consider about the Financial Instruments and Exchange Act, which is similar to Securities Act in the US. And also, if the investor wants to extend the loan facility to the borrower, they have to consider about Money Lending Business Act, which requires the lender to be registered to the government if they want to lend some money as their business. There's some legal vehicles topic, but it's not so special to be honest. If they want to establish an investment fund, they usually establish or set up partnership. And if they want to set up the joint venture, they establish a corporate type fund. There are some cases that trust is used to raise some fund, but I personally think that partnership and corporate is by far more common than trust type fund. And lastly, tax. To be honest, there's no special tax relief for social impact finance in Japan so far. And this is a bit of issue because there's no economic incentive for the investor or company to give some money to invest some money as blended finance or concessional capital. So I'd say it's a kind of harder for the player to jump in the blended finance area because there's no tax or economic benefit. And lastly, on financial terms, there are no specific standards so far, so the players have to use the normal common business financial terms, and they try to add some blended financial terms in addition to the normal terms and conditions of the financial scheme. That's all.
Thank you very much, Satara. That's great. So, so we've sort of laid out the way blended finance works, and we laid out a very thumbnail sketch of how different legal systems work to support it. I wanted to move, if we could now, just to a bit more of a discussion, and start off by asking Ritesh and Tristan for their thoughts on what trends they're seeing in Asia-Pacific region, and what opportunities there. Perhaps, Ritesh, could I perhaps start with you?
Sure, no, thanks, Michael. That's helpful, and thanks for the other interventions as well. It was quite interesting, and I learned a lot. So maybe just to give you an overview on what we are seeing, given we do collect data on blended finance globally and also very specifically in APAC as well. I mean, broadly, just to give you a overall understanding of the size of the market globally, it's around $214 billion. So that's essentially what the overall blended finance market is at this point in time. So it's not a huge market, but it's an area where I think there's clearly a lot of opportunity to scale. Coming to what we see in Asia, so out of that $215 billion, around $45 billion is what we see as the overall market size for Asia, and it's nicely equally split between ASEAN and South Asia, 50-50 as well, so around 22-23 billion for ASEAN and 22-23 billion for South Asia. Where we see majority of the traction from a corporate standpoint is India. We've seen India has got the maximum number of transactions. It's also has been, I would say, there's been a lot of innovation there as well. So clearly a lot of innovative structures which have worked at the beginning there. And this is followed by Indonesia, Vietnam, Philippines, and Cambodia. So those would be the top 5 where we've seen maximum number of blended finance transactions. Which sectors more specifically, we've seen clean energy, really focusing on renewables, power transmission, off-grid energy and distribution, energy efficiency and transport kind of projects within the clean energy area. We've also seen financial services as the next sector where we've seen a lot of blended finance transactions. This is more focusing on MSME financing, more specifically. Also, looking at elements of gender, and I believe today we have some case study on ASEAN Women Empowerment Fund as well, which kind of will talk more about it. The third area where we've seen a sector where we've seen a lot of transactions and blended finance in the region is infrastructure. This is infrastructure X energy. So this, I'm not including the clean energy part in that sense. So these are roads, dams, hospitals, water facilities, etc. And then the last one is agriculture, and I think this is agri is an area where we are seeing a lot of traction of lately. Deals and transactions have been picking up, and I think it's also linked to the overall angle of food security and the food price inflation, which many of the emerging countries are facing, and that's also propagating more innovative solutions in the space of agri as well. Just a couple of quick points on what we see. Most of the blended finance transactions do tend to be more focused on mitigation. Adaptation really receives a very small part of the funding. But what we are seeing is an interesting category, which is hybrid. It is really at the intersection of both mitigation and adaptation, and I think that's an interesting area to keep a watch on. What we've also seen, as I was mentioning in my introduction, is that blended finance is just a product structuring approach. So you could structure it as a fund, a project, a facility, and I think the maximum number that we see in this part of the world has been in form of funds, which is great because we want to see more aggregation of projects coming together, and which then has the potential to scale and also bring mainstream private sector capital in. So we've seen a lot of funds. We've seen at project level and company level, followed by bonds and notes. So those would be the key forms of structuring that we've seen. And then the last part is really on, what type of capital has come into blended structures in this part of the world. Mostly it's come in form of concessional capital. So really, one of the slides that I talked about where, the ODA funder or the philanthropic actor has taken disproportionate risk or lesser return, which has motivated mainstream private sector to come in. So that's the concessional capital. We've seen a lot of use of guarantees as well, and guarantees has been a more pronounced structure in rather even lesser developing economies in South Asia and some of the ASEAN countries which are lesser developing in that sense. And then, of course, technical assistance and design grants. And normally, a blended finance is something where we see a combination of all these archetypes coming together and forming a blended finance structure in that sense. So I hope that gives you a bit of a broad overview on what are some of the key trends that we see in APAC. I'm happy to share more on challenges and opportunities if there is time. Thanks.
That's great. Thanks so much, Ritesh. In fact, there's a lot going on, which is great. Tristan, your thoughts?
Thanks, Michael. Yeah, I mean, I think Ritesh has really covered a lot of the trends that we're also seeing. I might just drill down a little bit in some of the learning or interest that we're seeing around catalytic capital, particularly as I mentioned before, and the sort of interest we're seeing amongst private wealth holders, family offices, in exploring this new or relatively new approach through their family offices or through their foundations, looking at adding approaches including equity and debt to their traditional grant making. So this is something that we're actively supporting and encouraging, although we still see a huge amount of caution with the approach. I think there's still a sense that of this idea of what we've defined in our report as two-pocket thinking, where there's one pocket of money set aside for investment and the other to do good. And one of the things that we're looking at is how we can sort of challenge that approach to philanthropy on the one hand and to investing on the other, to think about how you can combine the two more effectively. So we're starting to see a breakthrough with a few organizations looking at sort of integrating this practice. So that's one thing that we're seeing. We're also seeing that, as Ritesh said, the role of DFIs, I think, playing a critical role in this, in the growth of blended finance in the region. And in terms of markets that are driving it, I'd focus a little bit more on Indonesia, not only because of the sort of the scale of transactions we're seeing, but also in terms of the leadership that we're seeing from government there globally. I referenced this before with the launch of the Global Blended Finance Alliance and the PTSMI, the special mission vehicle established by the Ministry of Finance to support infrastructure projects that takes a blended finance approach there as well. So I look at Indonesia as a leader within ASEAN in driving forward the blended finance agendas as well.
Thanks so much, Tristan. I want to come back to both you and Ritesh in a moment about any regulatory barriers you're seeing or any sort of legal issues that you're seeing. But before we do that, two things. First is, can I mention to people, we are going to try and set aside some time for questions before we finish. So if anyone's got any questions, please in presence, put your hand up and on the webinar, please put them in the chat and we'll take it from there. But before we go to that, I wanted to, if I could ask Vivian to take over, and particularly to sort of round out, you've been chatting about what's going on in the region in terms of actual substantive projects and things. I want particularly Vivian and Stara to chat a little bit about examples of case studies of things that are happening in the region from the legal perspective, so we can get that angle as well. Vivian.
Yes, thanks, Michael, and thanks for those thoughts, Ritesh and Tristan. I think it is really interesting to hear your sharing of what you're seeing in the market and the size of blended finance opportunities, and also AVPN proactively involved in structuring and grant funding. I think that AVPN is a very good example of an impact actor that is also it is a charitable organization and also engaged in grant funding. So I think in the other aspects that we highlight through our report, and really our report is the starting point to explore more possibilities. And what I think we hope to highlight as well, that blended finance can be multifaceted. I mentioned earlier there's multi-stakeholder, can also be really led by different stakeholders, could be led by the public sector, could be led by foundations, could be led by private sector as well, including a number of funds. So we try and highlight more of that through the case studies that we like to present. So we actually start off with Sotaro to cover a case study from Japan. So if I can hand over to you, Sotaro, to take us through this. Japan.
Thank you, Vivian. I'd like to introduce about the case about Japan ASEAN Women Empowerment Fund. This fund is, to be honest, set up in the... Is that okay?
Yeah, that's fine. We're just fixing up the slides for you.
Okay. So this fund was set up as the Luxembourg corporate type fund. So in that sense, this is a kind of international transaction. And the Japanese public investor invested into the fund. That's why I chose this case to introduce to you. The fund purpose is to empower women through increasing their access to financial services. Maybe you should move on to the next slide because it might be easier to grasp the image of the structure. Yes, thank you. As you see, the fund invests or extend the loan to the microfinance institutions, and that institutions lend some loans to the female entrepreneurs. So in that sense, the female entrepreneurs have access to the financial sources. And this fund has the aspect of gender lens investment because this fund focuses on female entrepreneurs, as I said. Moving on to the capital structure, as you see, there are 3 layers of the shares: senior shares, mezzanine shares, and first loss shares, which is the most junior shares. The private investor invested into the senior shares, which is the quite common type of shares. And to the mezzanine shares, public investors like JBIC or JICA invested into the second part. JBIC, Japan Bank for International Cooperation, is also the government-backed bank. And JICA, as I said in the previous part, in the Japan overview, is the government-backed organization as well. And what is interesting is that this mezzanine share is inferior to senior shares in terms of the rate of the, let's say, interest rate as well. So in that sense, public investor provide the concessional capital to the senior shares. And moving on to the first loss shares, which was invested by Blue Orchard. Blue Orchard is the fund manager, as you see top left of this structure chart. And they provide the most concessional capital to the fund, and they accept the first loss shares to cover the foreign exchange or credit loss of the female entrepreneurs or microfinance institutions. In that sense, we can grasp 2 major key takeaways from this case. The first one is that concessional capital providers do not need to take a first loss position, but rather mezzanine position to attract the private sector. As I said, public investor JICA provided the concessional capital, but they do not accept the first loss. Instead of that, Blue Orchard accept the first loss capital. So it's a bit creative way to structure concessional or first loss capital. The second key takeaway is that blended finance can be an effective tool for mobilizing institutional capital towards gender lens investing. As I said, the characteristic point of this fund is to invest into the women entrepreneurs as a final beneficiaries. So in that sense, blended finance works quite well for the gender lens investment as well. Thank you.
Michael, you'll need to unmute the room. Apologies, there was some background noise, so you're muted. Vivian, can you unmute the room? Michael, it would be the same way you did a moment or two ago. That's it.
Okay, thank you. So thanks, Taro, for that overview. And I think this is a really good example of a fund, and also a very interesting one in terms of the blending within the capital stack within the fund. So I think that's a very interesting example. And of course, the use of the instruments. But I guess you would probably already picked up that it's broad, right? Blended finance is broad. We covered jurisdictions, we covered potential thematic, and based on what Ritesh shared, it can also cover different sectors. And it's not specific to climate, but another example, I think in Asia, that is a fund that's blended finance that I think people in the market may be aware of, is the ADM Capital Asia Climate Landscape Fund, Asia Climate Smart Landscape Fund. So that is another example of a fund leading a blended finance structure. And so I will, however, take us to sort of another approach in looking at instruments, and also perhaps highlight again, comparability across jurisdictions, across themes and sectors. It is, I guess we can strip down in terms of the structures and instruments. There are applicability across. And here I'm actually, want to highlight sort of the global momentum now for blended finance, because blended finance isn't new. It has been used by development finance institutions for some time, but it has really drawn private sector strong interest in recent years because of its role in climate finance. So I'll cover that, and I'll kind of present that for nature swap case study, which my colleagues were involved in, which is Ecuador. So not an Asia deal, but again, just highlight the applicability. And the global momentum for blended finance, I would say the COP28 Declaration of Global Climate Finance Framework really concretely put this in focus. It highlights that there is a need to make finance available, accessible, and affordable for inclusive shared prosperity, for climate transitions and resilience. So beyond mitigation, as Ritesh said, most deals have been on the climate side covering mitigation, but there's a need to look at adaptation. And instrument level, it advocates for use of climate resilient debt clauses, that for climate swaps and sustainability linked bonds, and highlight the need for concessional funding, wider or more innovative sources of funds to free up fiscal space for climate action to unlock private finance, also emphasizing that climate transition needs to be country owned, which then see examples of like Malaysia and Indonesia having impact, public-led impact funds to look at transition. And with this alongside, we have seen the strong commitments from multilateral development banks, which I won't go into detail, but some examples of the amounts we're looking at highlighted there. And so this is in parallel, what I mentioned there, the task force comprised of MDBs led by IDB and the US DFC. And the purpose is to scale climate and nature-linked financing and credit enhancement instruments. And so the other highlight of COP28 is to bring emphasis on climate and nature together, among other updates. And so I guess in my role, working with my colleagues across globally on sustainable finance, we presented on this, so I have to credit my colleagues for the details here. And the Ecuador Debt for Nature swap is public-led. We previously advised on the Ecuador sovereign debt in the form of the bond, but in this case, it was a debt for nature swap. And we've already seen interest to look at this structure to be potentially debt for climate, debt for impact. So again, the applicability is there. And the other thing is, we actually didn't call it blended finance, but again, that's where sometimes what is blended finance? We see a blended finance when you see one in terms of elements of there being guarantees, being catalytic elements of it, and there could be different sorts of instruments. So I hope we haven't confused people with that, but that's really a lot of dimension. So a bit more on the Ecuador Debt for Nature swap transaction. It was a restructuring debt transaction, and the sovereign debt, as I mentioned, of the Ecuador government was exchanged for loans, and it was then encompassing a partial credit guarantee by IDB with insurance by the DFC. And highlight of this, why is it for nature? Because it carries a commitment from the government and fund, that a conservation fund, the Galapagos Life Fund, associated to marine conservation and preservation in the Galapagos. So if you want to look at objectives, you can very much imagine that such structures or instruments could be in place or adopted for financing, restructuring, or for impact outcomes. I think this is where we would hopefully hear from Ritesh and Tristan on what they see might be relevant. But I think my last slide here is to highlight that it is multi-stakeholders, a number of actors. So the government itself, in terms of involving the different parts of the government, and to be delivering the impact outcomes, those are very key. Of course, debt servicing. And then in terms of structuring and also the financing side and guarantees, you can see the number of actors involved. Credit Suisse, UBS now, apologies, and IDB, the DFC, and Bank of New York Mellon. And there are also funds and civil society, the Ocean Legacy Project, and the Galapagos Life Fund. So it's multidimensional. Not every deal has to be this complex, but I hope that gives everyone a good idea of what's possible. And I'll turn it back to Michael. Thank you.
Thanks, Miriam. It certainly bears that point about innovation. I won't go into that slide now. That's the slide you can see up on the screen is one that talks about some of the issues we were discovering and our assessment of how well the blended finance frameworks are working. Let me come back to that later. I'd first of all like to go back, if I can, to Ritesh and Tristan to chat a little bit about particularly their perspective on what they're noticing from a regulatory or legal point of view, issues that have emerged, issues that we should be aware of, that kind of thing. Ritesh, maybe to you first.
Sure. Thanks, Michael. I mean, honestly, the way we've been seeing this field, especially from a law standpoint, right, and from a regulation standpoint as well. I mean, if you see most of the laws and the regulations actually which have been defined by the countries are really not equipped, or I would say well equipped to bring this innovative financing mechanisms like blended finance in play, right? I think that comes out quite clearly when you see, and this really is from examples, right? In many countries, what we've seen is, either the laws are outdated or not attuned to these mechanisms. As an example, we've seen in countries, in some countries in Asia where you cannot do risk pooling in fund structures. So the example which was shared in the Japan ASEAN Women Empowerment Fund, or the one which Vivian shared, that is legally not allowed, honestly, in that country. So how do you then go and structure a blended finance transaction if legally you cannot do different layers of capital stack in the same structure itself? So that pretty much crowds out the fund structure, which is the hope, where we can see more funds and aggregation and attract mainstream private sector capital as well. Coming to the philanthropic space, and of course that's more of Tristan's domain, but clearly what we've seen is that in many countries the CSR acts, or the charity laws which are there, right, they're clearly you cannot make a deployment into a for-profit structure, and if you do that, then it becomes a legal hurdle as well. So and in many of the countries it's also honestly very gray. So you cannot so typically these organizations wouldn't want to do something which is gray, and they're just perfectly all right giving grants in isolation towards advancing SDGs, which is of course not something which brings long-term commercial viability, and is always dependent on grant funding, rather than seeing that transitioning into something which leads to long-term sustainability. So I think those are some areas which are important. I mean, I can keep going on, honestly, even from a regulatory standpoint as well. There's a lot that honestly central banks and policymakers can do as well to really convene these stakeholders to build the ecosystem around blended finance, to some extent also influencing behaviors as well of the financial sector, but also from a supervision and de-risking standpoint. I think clearly there's a big capacity gap as well, and once we have a better understanding of all these aspects, there is a lot that could be done, or I would say self-reflected amongst these policymakers and regulators, to see what is it that is there in the regulation which is unknowingly really stunting innovation in bringing these innovative structures to life. So let me stop there. Every country has their own challenges. There's no one solution which fits all, because laws in every country are different, as we know. But yeah, I think those are some clear areas which we've witnessed when we've seen these transactions coming out, or when we've spoken to fund managers or project developers or companies as well who have tried to embark on blending, and those are the challenges which they have kind of faced. So in a nutshell, I think there's a lot that needs to be done from a law standpoint, from a regulatory standpoint, and from a policy making standpoint, to really bring a more enabling environment for blended finance in emerging markets, so that we can see true unlocking of private sector capital in areas where it's not flowing. So I give it back to you, Michael.
Thanks so much, Ritesh. That's a formidable list for a short overview. Tristan, what are your thoughts on that?
If I reflect on the policy program that ABPN led in partnership with UN SCAP to support both, on the one hand, the development of social enterprise legal forms and policies across APAC, and on the other hand, the growth of impact investing, which I think is very much aligned to the work to grow blended finance. I think we saw quite a lot of work done by governments in thinking through legal forms or registration or certification processes for social enterprises or impact-focused businesses across the region. And there have been a number of laws put in place. So, for example, the Thai Social Enterprise Promotion Act, which was passed a few years back. You've got a social enterprise article in Vietnam. You've got the certification process in Malaysia that Vivian referenced earlier. But none of those really, I think, have solved the problem of how these entities can attract both grant capital or philanthropic capital as well as investment capital, which would help, I think, to really think through how, as Ritesh highlighted, the challenge of investing of deploying grants to for-profit structures. So that's something which I think is still a big, murky, confusing area across the region. I think there's one sort of interesting bright spark is in Singapore with the recent changes to the family office regulatory regime, which does allow for grants to be deployed to blended finance instruments. That's a really interesting innovative approach that's been taken here in Singapore, which I think should be welcomed and others could look at as well as a way to attract philanthropy into blended finance and benefit from the tax regime here as well. So that's really interesting to explore. That was launched last year. I think not focusing specifically on the legal barriers, but more the cost of legal services is also a huge issue. So the high transaction cost is something that was highlighted in our work, given the kind of the bespoke nature of these deals and the lack of a playbook around how they should be done. Each one has to be kind of almost done from scratch, which means it's very, very expensive to construct these deals. As Vivian highlighted, just the complexity of some of these structures make that very prohibitive as well. So in that regard, there's a lack of concessional capital that we see that's willing to do that, willing to actually fund that type of work. That's not seen as something that's going to put in your impact report that you funded the structuring of something isn't something that sort of tells you a great impact story in terms of how you use your philanthropic dollars as well. So those are some of the issues that we see. Liquidity is another issue, uncertainty around exits. That's something that we're seeing. Issues around data and transparency and reporting on these issues. I think, and the other issues perhaps less non-regulatory that we're also seeing just around capacity, pipeline development, proof of concept, these sorts of things that are still leading to sort of caution amongst investors as well.
Thanks, Tristan. Yeah, and a lot of those issues do really feed into each other, and they feed into the legal side too. So the cost thing is that issue about bespoke or making something replicable is an ongoing, continuing issue. Let me move quickly to questions. I know we're running out of time, but we've certainly got, I think, a question in the room.
Yeah. Sorry, I'm Stephanie. I'm the UBS Sustainable Impact Investing Strategist. I'm not a lawyer, so I'm sorry for hijacking the session. But thank you very much. I actually had a question and Ritesh and I think Tristan both touched on this, but to what extent actually it's not necessarily like before we get to the legal problem, there's still the fact that there's just a fundamental governance problem, right? Because like to what extent like do you have kind of transparency on kind of what percentage of deals, like what's the leverage ratio in these things? Or are we basically just pitting deals from like one philanthropic arm to the other? Or are we actually effectively attracting additional commercial capital? And is there kind of like, how can, a financial institution like UBS, like really kind of get their hands on these kinds of data in order to, go back to Vivian's point, to set up like kind of wholesale funds or kind of official structures that can kind of try and catalyze this? Because at the moment, from our perspective, it's like very disparate and fragmented.
Sure. I can maybe go first on this one. Yeah, I think the numbers that we are seeing based on all the data that we have globally, and we've been collecting this data since 2014, so we have almost a 10-year history of data on this. So essentially, the overall high-level leverage ratio what we're seeing is more like 1:4. So $1 of concessional capital is mobilizing $4 of commercial capital. Now we have to keep this in mind that the commercial capital also has two layers, right? You have MDB DFIs who are normally deploying majority of their money into the commercial layer as well. That is almost 2.8 out of the 4 that I mentioned on the leverage. And then the private sector, the mainstream private sector, which is, money coming from UBS clients or large asset managers, and that's around 1.2. So I think more work definitely has to be done towards leveraging more of mainstream private sector capital, and that's the institutional investor and the banks and the financial institutions, the money coming from that. And of course, honestly, the leverage ratios will differ from one sector to another. Some sectors require just a bit of a nudge, or some projects or funds require a bit of a nudge to get them over the line and make them into that bankable or investable zone. Those tend to be having much higher leverage ratios, especially the obvious ones would be clean energy related ones. But of course, if you go and talk about nature-based solutions, then the leverage ratios tends to go down because in many cases some parts of the structure is not commercially viable, and then you need to bring in more concessionality to make it commercially viable as well. So I think there's no fixed answer, but broadly, based on all the averages that we worked out for all the deals and transactions that we see, it's 1:4. That's the headline.
Thank you.
Thanks so much. I'm afraid we've actually come to the end of our time. So, I will have to wrap us up. And if there are other questions, please feel free to contact us directly, contact GAIL directly, and we'll seek to answer those. In wrapping up, I did want to just say a couple of things. First of all, to say a very big thank you to our panel, to Ritesh, to Tristan, to Vivian and Tara for all their comments, which have been really fantastic. I want to thank UBS again for providing facility here. But thank everyone for being here and talking it through, and a plea to please spread the knowledge. Awareness about blended finance, I think, is a major issue. Awareness about the legal issues is a particular major issue. So thank you very much, and look forward to continuing the conversation with other webinars. Thank you. Oh, sorry. The report is it's on the GAIL website. In the slides which will come around, there's a link to that. But we'll make sure that everyone has the link. And you can actually, if you type in blended finance report on the GAIL website under Insights, you'll find it. Okay, thank you.
Thank you so much.
Bye. I'll close it off now.